Good morning, this is Ken Long from Tortoise Capital with a review of the swing trading portfolio for April 10th, 2016. This is the last week of the swing trade workshop, and so I want to just put together a quick tally of these case studies that we've been working through the course, as well as show you where we are in the trade itself and what's going on with it. So we're just going to keep a rough tally over here of the closed trades and the status of the open trade, if any, so we can get a sense of what kind of returns could these swing patterns taken collectively achieve when we have these kinds of market conditions. I want to emphasize that these trades are representative of the kinds of moves that are available when the market is in this circumstance back here. We'll use Apple as a proxy when you have this Z3 pinch, and we just had a big sell-off move to the downside, and we saw a lot of these owl patterns and pocket trades all the way up, and then we managed them in a certain way. Well, the market's not always like that, and so what we want to show is, and what I want to emphasize, is that these trades are going to look pretty good, I think, in aggregate. And I want you to remember that these are relative to a market that is making this kind of a move. We attribute 50% of our returns to what the market's doing, 25% to the sector, and then 25% to the specific target. And so I don't want to estimate the potential returns of these systems simply because the market has such a large vote. But what I do want to show is that when the market does behave like this, and when it's in that kind of condition, sometimes that kind of a move will occur, and this is what the results typically ought to be. So having said that, let's look at Apple. Our first trade entered with the stop down here, exiting here on the first wave for 1R. The second continuation, the pocket trade, entry here, stop here, exit here. I rate at about 1.2. The open trade right now, we bought the continuation here with the risk here, and it's currently here. I also put that at about 1R. So that's the format I'm generally going to follow as we go through this this exercise. And looking at the trade now, we're still in good shape. I'll be moving my stop up to that 2-day low as we're threatening the bottom of the dragon now, and the 10 period has rolled over. I'm going to be moving my stop here, so we're going to lock in at least a half an hour unless we get the adverse gap. So that's Apple. All right, next up is Amazon, and our initial trade was a -1, then a re-entry here with a risk here, and this is still open, and I rate that at about 1.5. So that's Amazon, and this still feels good. I will probably also lock this in just below the Bollinger Band mean, with the idea that we're going to see potentially this move up to the RL 270. So that's we're going to lock in about a half an R, and we have an open R of risk, so that puts us at -1 and 1.5 of open risk. Or open gain, I should say. Next up is American Express. Our first trade was entering here, stop here, exiting here. That puts us at 1.2. Got the re-entry here, and we're about -0.2. And I like this 1-2 support at the RL 270, so we'll keep our stop in place where it is, and looking to get up to 62. Next up is Caterpillar. First trade entered here with a risk here, exited here. I put that at 1.5. Second trade re-entered with this initial stop here, second position here, and an exit here. So this is about -0.2. That's about 1.2. So we'll net that out at 1 for the second cycle. Third cycle re-entered here, We're about, in the stop here, we're about half an hour underwater. So minus 0.5 on cat. I'll keep the initial stop here. Still looking to get this and this. Next up is CPGX. This was a breakout from this space. We framed the follow-on move in this way. We got a gift from here. This one is still open. I put that at 1R of open gain. Excuse me. Next up is Chevron CVX. First entry is here with a stop here. That's 1.5. The second trade, long from here with a stop here. That's 0.5. Last trade, the open trade, was entry here, stop here, gain of about 0.5. That still looks pretty good. I'm going to move my stop up underneath this one to lock in gains as we are approaching the resistance level. Excuse me. Put that right at the top of the dragon skin. Don't like losing money. Next up is DuPont. DuPont is open trade, entered here, stop here. We're about minus 0.5. Oops, wrong one. Next up is Dollar General. This was a breakout from sideways quiet channel. We framed this as a which way to go. Got our entry here. Ended up scratching here for a 0. Kept the trade frame in and got short on Friday. So Dollar General is a 0. And my estimate is about 0.5 on the short side trade. Next up are the diamonds. Our initial entry here with the risk here. So the first trade is 2.5 to here. The second trade, we got this entry with a stop here. That comes at about 0.5. And this last trade is here to here, maybe minus 0.1. Call it minus 0.2. I still like that trade. We'll keep that stop, and off we go. Next is Disney. We had this trade frame here. We went short. Took a 1-hour loss here, and we are short again from here, from Thursday, with an initial stop there, and I put that about 0.2, so we got minus 1 and 0.2 on the Disney short. Dow Chemical is next. Got our entry here with the stop here on the first trade and an exit here. That's 1R. And our second entry was here, or entry was here with a stop here, and that's basically a scratch. So I think 1.5. Let's call that 1. We are long from here with a stop here. That's minus 0.2. Next up is Devon Energy. Initial entry here, stop below the dragon, exit here for 2.2R. Re-entry here, exit here, that's a -1, and no open trade. Sorry about that. That was emerging markets. Let me go back to Devon Energy. Put it in the wrong column. First entry in Devon Energy here, stop here, exit here, that's about 1R, as we noted at the time. Second entry here, initial risk there, exit here, we're going to call that one 1R also. Entry here, initial stop here, we're in the money about 0.8. And I'm going to lock in that stop, lock in that gain right about here at the RL10. EWW Mexico, first entry, initial risk, 0.5R. Second entry here, exiting here. -0.2. Third entry, so let's get that in. Sorry. Third entry here, initial risk here, exit there, 0.5. And third entry was here, exiting here, that's a -1. So Mexico got us -1. Brazil, initial entry here, stop here. This is, you got to count this now. So 1, 2, 3, 3.5. Second entry, risk, exiting here, about 0.5. Minus, let's see, that's about -0.5 on that one. Now we're short. This is our current trade. Oh, and that's a -1. Sorry. This is South Africa. Long with the stop here, 1, 2, and then re-entry here with the stop here, we're about 0.2, so that's 2, and then an open trade value of 0.2. Facebook is -1 on the first trade. Second entry, initial risk, initial entry, initial stop. Very poor management. Let a whole R get away. That's at a scratch. Horrible management. This is China. So an entry here. Initial risk, that's 1R. Entry here, initial risk, 1.5. Open trade is basic minus 0.2. I'm still looking to get here. Next up is the Google entry, initial risk. Second entry with initial risk, so that one is a scratch. This one is about 1.5 R of open trade. Goldman, long from here, initial risk, that's 0.2. And long, this is about minus 0.8 of open. IWM entry risk 2, 1, and then entry, and this is about 0.2 of open risk. Open gain. This is the real estate, so entry risk, so 1.2, as we said. This one is 1, 2. And the third trade, we're looking at 1, also 2. JP Morgan just tracking, didn't trade it. Coke entry risk. We'll call that one 1. Re-entry here with the risk there. That's also 1 of open gains. Lows entry, initial risk, so we've got just added the risk box. We could count this rascal up, so 1, 2, and this one is a scratch, so 2R on the double scoop. Let's call that, yeah, 2R of open risk. McDonald's entry risk, so 1, 2, 2.2 on that one, and then on this one using the same risk box, about 0.8. So we're going to call that a total of 3 of open gains. Rats. Uh, 3M, the ones that get away. So entry here, risk, that's about 0.8 of open gains. Microsoft is all open gains, so we got an entry here, initial stop here, and we've locked in our gains up to here, so this is 1, 2, we'll call that 2 of open. Nike, our initial entry was here, initial risk, I'm going to call that 1.2. long here, 1 hour loss, and now short with a stop here. That puts that at 1 hour open. Pfizer entry 1 hour there, so this puts us at 1, 2 of open. Procter & Gamble, the first one is a scratch, the second one re-entry with a stop, that puts us at about 0.5. These next two, the technology and the S&P, we were just tracking but not trading. Treasuries was a -1. Tesla. Pretty calibrated. So this is 1, 2, 3. The re-entry is here with a tighter stop. 1, 1.5, with a second entry here. So that's down a half, so we are at net 1. United Health, the first entry is here with an initial risk, so that's 1. That's about 1.3. No trade on this one yet. All right, USO. Have initial entry here, risk 1.2R. Entry, we'll call that one a scratch. This one is short, and we're going to call that 0.2. So we said 1.2. 0.2. Yeah, it's, oh, my bad, I didn't see that. So this one is short, and we're at -0.5 open risk on that one. UTX, long from here, got about 1 hour in hand of open. VXX, we were short from here with a risk here, second position here, and covered here. So that first one is 1, 2. This one is 1, so that's a 2 and a 1. And no open trade. Verizon, initial entry here, initial risk here. So that's 1, we're going to call that 2. Re-entry here, exit here, so that's -1. It's the perils of that gap. Walmart, initial entry here, initial risk, we're going to call that 0.5, and this one is basically a scratch. Win, first entry, initial risk, 1.3 R to here, and then from this one we have 1 R. XIV, the first trade, entry, exit is 0.8. Second series was an entry here with a risk underneath, so, here, entry here with our risk, so that would be 1, 2, and then this last one is about a 0.5. We didn't trade the XL series. We were just looking at those for information purposes. XME, 1.3 on the first trade. Re-entry here with a risk here, stop there, that's 1. And this one, entry here, prices right there were basically at a scratch. All right, now taking a quick look at the these results, the closed trades netted out to 45.6 R on 54 trades. The open trades are 19.6 in hand on 33 trades. So one thing you notice that the initial trades, when the market was more directional, had a better return. That's about 0.9, and this is about 0.67 per trade. Next, we're going to take a look at the min and the max. So just using the find max function, 3.5. Now we're going to do the same thing in this column. So we select the max. The maximum trade was a 3. Do the same for the min. Again, -1. I'm going to check for the average trade. .84, I was off by a little bit. And the average trade was 0.6. I'm going to find the standard deviation. So we're going to take the standard deviation of and the standard deviation here. Find the system quality number is equal to 10 times average divided by standard deviation. That can't be right. We're going to count the number of winners and the closed trades, so we're going to use count if this range is greater than 0, had to put the quotation marks in there. So we're going to count if greater than 0. So the win was 42 out of 54. So we're going to call the 12. So the win percentage is equal to the wins divided by the... All right, so that's ridiculous, 0.77. Again, that's more of the, that is not more, it's all the market condition and being on the right side of the market. We'll see the similar numbers on the closed or on the open trades just a second. When we crank that out, there were 21 wins and 12 losers among the 33. I was counting the scratches as losing trades to drive down the win percentage. So, you know, not too shabby. Now, if we run a easy fit Excel add-in on the data, this is what the distribution looks like for combining the closed and the open trades. It's a Wakeby distribution, which is what's used in hydrology and measuring heights of rivers. So you get a very tightly controlled left tail, a strong normalish distribution in the middle, and a fat right tail when it overflows the boundary. So that's everything I'm looking for in a distribution, and that was coming from combining the gains together. Basically, these were the closed trades and then sorted, and these were the closed trades, or the open trades and sorted. So that's what's currently open. So that's what we get. So all in all, I'm not too unhappy with that kind of system results. But again, this is what should happen when you apply these techniques against a market that makes that kind of a move. And let me make the following point. It's not necessary for you to have taken all of those trades. What we really care about is what kind of results does this thing get, given the population of symbols. There's 50 symbols in there, and I didn't take trades in all of them, although there were trades probably in all of them. And so this is I consider this to be a sample of what this system will do. That when you get those kinds of trending moves, it would not be impossible to see a win rate of 75%, and with an average trade of 0.84. What I should do is also look at the average win versus the average loss, but it's going to be about 3-2 is my guess. So the average win is going to be bigger than the average loss. Well, why don't I just go ahead and compute that? Stand by. We're going to use the count if function. I should say the average if. So average if range so here if it's greater than 0. So the average win is 1.29. Look at the average loss. Average if less than or equal to 0. Minus 0.7. If we make that just less than 0, I wonder what effect gives us. Yeah, so it doesn't count the scratches. But in the win rate, to be fair, we were counting the scratches. So there it is. Almost 2-1. You know, so win rate of 3/4 and a payoff at 2-1. So that's not too shabby. All right, so I pronounce this experiment completed. We'll continue to monitor the swing trade portfolio on an ongoing basis and include that in the weekend webinars. But that's what it looks like. So thanks for kind attention and putting up with my fat fingers and my coughing. So thanks a lot. Keep your wrist measured and your powder dry.